In today's video, I am going to go over the Fraser Valley and Langley real estate market and talk about the fact that even though we saw a rate drop in July, we're still seeing sales decline. I'm going to jump into why I think that is and where I think the market's going. But before I jump in and share this information with you, if you guys are enjoying my content, please hit that like and subscribe button. And a reminder that if you want to book a call with me, you can do so by clicking the Calendly link in the description below. So, like everyone anticipated, at the last Bank of Canada meeting in July, they decided to drop the overnight lending rate by 0.25%. Prior to the July meeting, there was a meeting in June, and again, rates dropped by 0.25%. And just a reminder of what this means and how it affects you is that for every $100,000 of mortgage that you owe, you can expect your mortgage payments to go up roughly $15 per month. So for $1 million mortgage, you can expect an increase of $150 a month. Keep in mind, this is if you have a variable rate. If you have a fixed rate, your payments will remain the same until the end of your term when you have to go to renew. What's interesting is that although we saw 2 rate drops over the summer months, sales dropped. Usually when rates go down, sales start to increase because more buyers come forward into the market. Looking at sales in the Fraser Valley Real Estate Board for all property types, we can see that sales have dropped since May. In the summer months, I know it's common for sales to fall off in general because people are away on holidays. However, when we compare this June and July to last year's June and July, we can see that sales were higher, although they did drop. But let me remind you that in July of 2023, we saw rates increase. So that does make sense. Whereas this year, even though rates have come down 50 basis points over the last 2 months, we've seen sales drop. Further to the sale decreases we've seen throughout the summer months, we've also seen the number of active listings rise. When we have listings increasing and sales decreasing, this means that we're generally going to be headed towards more of a balanced to buyer's market. Overall, the Fraser Valley is sitting in a balanced market. When that happens, we should expect sale prices to plateau or decrease. The next time the Bank of Canada meets is September 4th, followed by October 23rd, with a final meeting happening in December. And at those meetings are going to have a big indication on what we can expect for the 2025 market. With rates coming down the way that we've seen them, why is there still no buyer urgency and we're seeing sales continue to decline? The overall trend that we're hearing from lenders and economists is that they expect rates to continue to decrease throughout the remainder of 2024 and into 2025. We can see this chart here shows the expected Bank of Canada rate path. So they're projecting that by June 2025, we should see the overnight lending rate at 3%. Currently, we're sitting at 4.5%. And so there's just a lot of buyers that are still feeling like they want to continue to sit on the sidelines and wait to see those rates come down so that they're pre-approved for more. Now, when that does happen, and we did see it in the 2020 market during COVID when rates came down dramatically, is that the market goes up and it goes up fast. So when people are ready to jump in, it seems that everyone jumps in at once, and we do see those sale prices to increase. So what you have to ask yourself is, how much are you willing to pay for the same property at a lower rate but a higher price versus purchasing today at a higher rate but you're getting a better price? I've been going on a lot of listing appointments lately, and I have a lot of clients that are ready to sell. They want to know how much their home's worth, but they're not quite ready to make that purchase on the other side yet. And a lot of it has to do with the lower sale price they're getting comparable to what they would have gotten in 2022 and the beginning of 2023, and the fact that rates are high on their purchase side. So there is still that dilemma that a lot of people are facing who do want to move. Subject to sales are also quite common right now in my marketplace. People, when they find the right thing to buy, that's great. However, they're not quite ready to sell their property yet without having that purchase secured. So when doing that, you always have to pay a little bit of a premium on the purchase side because having subject to the sale of your property isn't necessarily very attractive to the seller on the other side of the deal. I personally just renewed one of my mortgages, so I went from a 2.9 9% fixed rate that I had, and I chose to renew at a variable. I was pretty torn, so there was a 3-year rate available around the 4.9% mark, but I did opt in for the variable rate, and that's at 5.8%, which is still higher than we're used to. However, I do feel rates are going to continue to decline, so I chose to hold out, although it was a difficult decision. And that's exactly what I'm telling my clients to do that are looking to sell, is that if you do find a great property for you and your family on the purchase side, you are going to get that today at a lower price, even though the rate might be a bit higher. I'm recommending you go in at a 1 to 2 year fixed or potentially a variable rate, depending on your risk tolerance. And then as rates decrease, you can lock in at a lower rate. But at least you secured that purchase at a lower price than you would have when rates decrease, as prices are expected to go up. Further to that, I will mention that a lot of the evaluations I'm doing are for people that are wanting to upsize, and it is a good time to upsize, and I'll tell you why. First off, when we see a balance to buyer's market, we know that sale prices are coming down because those people that want to sell have to be willing to negotiate on their price, because buyers right now have a lot of choice. That said, when we do see the market change like we have over the last year, detached homes get hit the hardest, followed by townhomes and then condos. What I mean by that is that the volatility of detached is a lot more than the volatility we see in other products such as townhomes or condos. So when the market goes up, prices for detached go up the most, and when prices drop, the price for detached also goes down the most. So right now, the gap between purchasing a townhome versus getting into that detached property is a lot smaller than what we've seen in past years. If you've been in your townhouse for 4 to 5 years, you've most likely built up quite a bit of equity, enough so to put down towards the down payment for that detached home. And when you look at the monthly cost of a townhome with strata fees versus a detached home that has a suite, you might be surprised at what the monthly payments are, because rent right now, especially in the Fraser Valley and Langley area, is extremely high. And that attributes to the fact that rates are higher, prices are higher, and most first-time home buyers are having a difficult time to get into the market because saving up for that down payment has gotten a lot more challenging. I hope you guys found this information to be beneficial to you. Like always, if you have any specific questions about your property or how to get into the market in general, you can click the link below and book a 30-minute call with me. And again, I'd really appreciate if you hit that like and subscribe button. As always, thanks for watching, and I will talk to you guys soon.